Good evening, everyone. We're going to go on with our session, day 2 for this week, and we're going to proceed with what we had started yesterday. So, as we wait for others to join in, um, I'm requesting you guys to go to the chat section. If you're in the yesterday's class, let me see your comment on the chat section. If you attended yesterday's class and maybe if you learned something, feel free to interact on the chat section as we wait for others to join. I want us to be at least 30 so that we can go on with the class. So you can as well confirm on the chat section if you can see my screen and if you can as well get me loud and clear. So let's go to the chat section. Let me know where you're watching from. If you're in the yesterday's class, let me know what you learned from yesterday's session. And also let me know if you're a beginner, if you're an intermediate trader, an advanced level. Let me know that as you go on. I'll be reading your chats, or rather your comments, as we wait for others to join in. I'll be reading your chats. Tiger was in the class. I love you was in the class. I remember loud and clear. Samuel Mturi from Kitale. Kenneth Davis from Eldoret. Kenneth is saying that he's locked. He's locked in, you know. All right. Those who have just joined us, I want to confirm if you're in the session that we had yesterday. We shall be going on with our classes up to Friday, 1 hour every day. By the end of this masterclass, I'll allow some of you guys to join our Discord server. I'll be giving out some goodies at the end of the masterclass. That is probably on Friday. So make sure you don't miss all the sessions that you're going to have this week. Calvin Olo logged in from Kitale, was present yesterday as well. Mr. Wycliffe from Kakamega, very interactive session. Wow, that's so amazing. So we are going to have an interactive session as well tonight. You can also watch us from YouTube. If you're having an issue joining the Zoom, you can live stream from YouTube because the same session is being streamed on YouTube. So Mumina Guyo from Eldoret, Esther from Kiambu. Wow, that's amazing. Abu from Kitale. Samuel Mturi. I remember you, Sam. We took a photo in Kitale. It was all about liquidity. Today we are even getting deeper. Enoch from Eldoret. Oh, that's so amazing. So let's wait for others to join. I want us to lock at 30 and then we're going to go on with the session. Meanwhile, if you have questions from yesterday's class, please feel free to type them on the chat section. I'll be reading them throughout. I believe tonight I might have my partner, the person that is in our community, an advanced trader, will be here to also answer some of your questions. I don't know if Sage is already here, but in case he'll be in the session, I'll give him a chance to answer some of your questions. So at the moment, please go to the chat section. If you have a question from yesterday's session, keep on asking those questions. Keep asking on those questions. Those who have just joined us, we are also live on YouTube. We're also live on YouTube. All right. So thank you so much for everyone who has just taken time to be with us this evening. I'm going to proceed with what we were discussing yesterday. What we're having is a free masterclass that started on 24th of this month, November, and the session is going up to 5th of December, which will be on Friday this week. So my intention is after this session, I want to give value. Every year in November, I always do a free masterclass for 5 to 10 days. So it happens that you guys are lucky to have this chance to learn from me and also from my experience in the financial market. So it's going to be an interactive session throughout, even as we go on. If you're in that group, I've been editing some free materials, which I'll be dropping them anytime soon before Friday. And they're organized from part 1 up to part 5, which has got beginner kind of knowledge that you can use to learn. If you are an advanced trader, you can use those materials to refresh your knowledge, right? So in this session, I believe we have guys from Uganda, Tanzania, and majority of Kenyans. I believe we also have guys from DRC Congo. So I'll be so much into English, although people from Congo, DRC, some of them, they understand Kiswahili. I'll see how to balance all this so that by the end of this session, everyone benefits from this. So feel free to be engaging on the chat section with questions, with feedback, so that by the end of this masterclass, all of us are going to be impacted and get value, right? So I want to share my screen. And as I share my screen, I want all of you guys to confirm if you are able to see, I want all of you guys to confirm if you're able to see what I've shared. I'm sharing, I want you guys to confirm if you're able to see what I'm sharing on the screen, so that we can have a smooth session. If you have joined us and you're not in the group, make sure, if you have joined us and you're not in the group, make sure you text me on WhatsApp, and I'll be able to give you the link to the specific group for the masterclass. If you have joined us and you're not in the group, make sure you text me. I'll be able to give you, what do we call it? I'll be able to give you the link to join the group. So right now we are 36. I believe we're going to, my target is us to at least 50. So anyway, I've seen Sage is around. I can allow Sage. I've muted everyone so that we don't have distractions. I've muted everyone so that we don't have distractions as we go on with the class. But I'm going to allow Sage, in case of anything, he'll be able to address questions on the chat section. So he'll be reading questions on the chat section as I go on. Sage, there's some noise. You can mute your mic maybe when you want to talk. You'll be
Okay.
you have a chance.
Just a moment. Let me
All right.
exit, then rejoin, because I'm seeing that I can't see your screen. And I'm sure it's from my side. It's not your side.
I can just stop sharing and reshare fresh. Let me do that. Let me reshare my screen. Let me reshare my screen. I've shared the chapter 1. If it's not clear, you'll just do that. So anyway, guys, welcome to tonight's session. We're going to continue with this series of learning. Yesterday, I did an introduction of market structure, whereby I was able to talk about the 3 trends that we have in the market. I highlighted on the bullish trend. I talked about the bearish trend. I didn't really talk about the sideways trend. So I'm going to do a whole recap of what we were talking about yesterday with real chart examples for the purpose of learning. Then I'll also be talking about the categories of trends today as I show you real chart scenarios so that you can have a better understanding and know how to apply all these in your technical analysis of the Forex market. So if you are following, keep on engaging on the chat section. Those who have just joined us, we are also live on YouTube. So All right. On the screen, we have CAD-JPY. I'll be using it for learning purposes. The screen, we have CAD-JPY. I'm going to use it for the learning purposes. However, I'm going to explain different scenarios. Okay, all right. So so for the sake of maybe those who didn't have a chance to join us yesterday, I'll try to really I'll try my best to give you a chance to also learn from these. So okay, what we have on the screen, I want us to use this section, is an example of a trending market that is bearish, or rather a market that is selling. And characteristics of a bearish market, it forms a series of low lows and a series of low highs. When the market is bearish, we're going to have swing points that are going to cause impulsive sells. And then in between, you're going to have pullbacks that are bullish. So basically, for instance, if you start our breakdown, maybe from this particular level, this was the last swing point that we had that caused price to break above this zone. So the last swing point that caused that break to the upside was where we have this type of liquidity called type 1. I know some people might not have heard of this, but as we go on, I'll be breaking it down for all of us so that we can have a better understanding. So there's some questions that I'll not be able to answer them right now until maybe the last day of the session. Others I'll be answering them as we go on. So on the chat section, Leaf Sage is going to be checking it out with you guys as he answer your question, in case you have one. So in this scenario, I'll call this area, or rather I'll identify this area as a shift. And once we have that shift, price tried to continue selling from these specific swing points. I think for the purpose of those who are not here, I'll just repeat. So at this area, we have a swing point, which is a low high. Then at this other swing point, we have some sort of a low low. We have what you call a low low. And the series goes on. So where we had a body candlestick closing below that low, or rather below this low, is what we call a break of structure. So this is what we call a break of structure. This is what we call a break of structure. So here we have what we call a break of structure, a BOS, break of structure. Then from that zone, we also have another break of structure from this swing point that is here. We have another break of structure on this level. And from that swing point, we have this low, high, and we have these low, low. Now, I want to use these. I want to use. Okay, all right. Now we are at 50. That's a good number. Now I want to use this scenario to explain a couple of things that are very, very important. I've said that I'm going to talk about the we have what we call the trend categories, and I'm talk about the trend categories. We have a pure bearish. We also have pure bullish. We have what we call bullish different bullish. Then we have what we call bearish. I'm writing so fast, so don't mind my spellings. Might have typos. Bearish different, bearish. I'll show you what do you look at those several scenarios. Now, before I use the chart, I want to do an illustration. So when the market is selling or buying, price moves in a random manner. All right, when the market is buying or selling, price has a tendency of moving in a random manner. I always say that we have what you call unfixed liquidity in the market, right? So I want to confirm if you guys are following and if you can hear me. Let me see on the chat section if you guys are able to, sometimes when you're doing a virtual session, people might be here and maybe they can't hear me. So I really need to do a time-to-time checkup to know that we are all of us listening and it's loud and clear. I want you guys to confirm if you can hear me and if you're able to see my screen. I want you guys to confirm if you can hear me and if you're able to see my screen, because sometimes, especially when you're doing an online session or rather virtual session, might have guys not really following, and I might be yapping. I don't like yapping as if I'm not making sense. So I need to confirm if you guys are keenly following. I need to know if you guys are keenly following and you are learning. I need to have more confirmation from everyone so that I know we are all together. So for those guys who are already advanced, this is just like more of a refresher class to help you master market structure. So this is like a refresher class to help you master market structure. All right. So when the market is buying or selling, we usually have a scenario like this. Let me show you. Let's say for a case scenario whereby the market is selling, you're going to have something that looks like this. Price moves randomly. Price moves randomly. You might have something that looks like this, and so on and so forth. Now, whatever I've shown you guys on the screen, this is an example of a bearish market structure. Let me try to make my lens a bit thicker. Maybe change the color. All right, so this is an example of a bearish trend. So as far as I'm concerned, when I look at this structure very well, this becomes my swing point. So for instance, I'm going to have this as my break-off structure, right? I'm going to say this is like my break-off structure. Let me just learn these ones here. So I have this as my break-off structure. And then, since that's my break-off structure, here, I'm going to have this as my, for instance, this might be my low high. And then this is going to be my low, right? So, and the series goes on like that. So, of course, you're going to have minor and major structure. So, we are going to have major and minor structures. So, you need to understand which structures are more powerful than the other so that when you're taking a trade, you know the best zones to hold your trade and those zones that you can get in quick and get out quick. So, when price is moving, I really want to explain something. When price is moving, we have levels. So, when this market was, for example, when this market was selling from this level here, it reached at this point, buyers came in where we have the low, and the buyers pushed price to around this level. And then later on, the sellers, since sellers are dominating this particular price action, or rather this particular trend, they also took they participated by selling up to this level. Again, buyers came in, bought up to this level. Sellers sold again. Buyers came in again, and then now we had sellers selling massively, and we continue with that sequence, or rather that series of direction. Now, when the market is selling, we know very well that the trend is bearish. There are some characteristics that I want you guys to understand that will help you to know zones that are very powerful in terms of liquidation, or rather liquidity. So this area where we have break of structure, initially when sellers were in and then buyers came in, and then later on sellers came and broke structure below this swing point. Let me try to. When sellers came and broke below this swing point, this area becomes significant. That means we have some liquidity that is seated here. That's why when the market was trying to pull back up to this level, we could see some reaction that happened from this level. So now this is a level whereby we call it a pure, we call this area a pure, call this area a pure bearish. We call it a pure bearish. All right. Now, if the market could have gone extremely deeper after selling and come near this particular swing point that caused the impulsive drop, that area we call it a bearish. We call it a bearish. Call it a bearish, different, bearish. Call it bearish, different, bearish. All right, bearish, different, bearish. All right. Now, we trade in a probable market, and that's why anytime the market is selling, I told you guys yesterday, the first thing that is very important when it comes to trading is identifying the direction. Once you know the direction of the market, and then you now look at the next, your most immediate area of interest in terms of areas of liquidity, it becomes easier for you to refine and execute a trade. So where we have the bearish, different bearish, there's a possibility of the market coming back to that level. There's also a possibility of market coming back to this break of structure and selling. Why are all those zones? Why are all those zones very, very significant? It's because as long as when the market is creating a series of a series of low high and low lows, we use the candlestick structure to know if the dominating participants are still in control or if they have been invalidated. For instance, you see, when the market comes and maybe closes below this zone, that's a clear indication that this trend has confirmed that it's bearish. But if after this is happening, and then we see this maybe structure coming here and then going back, and then we see a body candlestick coming to close above this, that means now the sellers who are in control have been invalidated. And that means the buyers have now reclaimed back the trend of price, or rather, the sellers have been invalidated, and now the buyers have been validated. Since when this was our last swing point that caused a confirmation of sellers being in control, when we have a body candlestick coming to close above this area, that means now sellers no longer have momentum. That means buyers are coming in massively. So you need to understand the pure zones, and you need to understand the different zones, all right? Yeah. Sage is saying, if you can't understand anything, please don't feel shy to ask questions. If you feel it's a stupid question, kindly ask. Because I know some of you guys are beginners. Whatever we're talking about, majority or most of you don't know this. These are different terms. Our strategy is kind of not for everyone, but we're trying to make it simple for everyone. Because I know majority of people they trade, they know familiar terms like order blocks, turtle soup, fair value gap, breaker blocks. I know all those things, but I and Sage and the members of the community had to come up with a simpler way on how we can put our strategy, and everyone can understand, and they can apply it in any financial asset class and trade and make money. Now, what we have is a bearish structure. So this area upper due, when the market is coming back, we call it pure I mean, bearish, different, bearish. And then these areas where we have the break of structures, when price comes and reject at this level, these are level that you call the pure bearish level. In this scenario, you're talking about a bearish structure. So it's a pure bearish structure. Now, we understand the aspect of resistance and support. So when the market is buying, for example, let's say the market is buying and then it is ranging and then it does like this. So this level here, where price is being restricted from selling further, is what we call the support level. And then the zone whereby price is being restricted from buying further is the zone that we call the resistance level. Now, when the market breaks above the resistance in a scenario whereby the market is ranging or showing signs of buying, the only time we're going to buy, we have to wait for price to come near the resistance level, which we call, in this case, if the market comes here and buys further, now this turns to be what we call resistance turns to be support flip. And this area, whenever you see a zone whereby we have had a break of structure and then we have a lot of touches, I identify that as impure liquidity. If you go and backtest, especially on gold, if you go and backtest, okay, you can backtest several pairs, but especially on gold, this thing works like magic. Anytime you spot impure liquidity, as long as you know how to refine and get a risk reward that makes sense, trust me, you're going to get very nice risk to reward ratio with good entries. Now, this is a scenario whereby the market is ranging and then price breaks the resistance, comes and retests and pushes up. So where we have the scenario by the market is kind of ranging, and then maybe it could be in a bearish trend, then maybe it ranges before it does anything. So in this case scenario, we could have something like this. The market is ranging like that, comes break this low, and then comes back. So this is where we had support. We had support at this area, and then at the area above, we have resistance. So when the market comes and breaks out resistance, I know that people talk about AMD, relation, manipulation, distribution, and all that, all those stuffs of distribution. I'll try to explain them in a simpler way as we go on. Now, so we have resistance, support. So when the market breaks this level, and the price comes and react at this level, now we call this support turns to be resistance flip. So in this case scenario, this reaction from here, this is what we call a pure bearish level, but here we have a liquidity we call impure liquidity, because the market did just react once. It had a lot of reactions before we had crazy momentum that caused the sellers to dominate or to continue with the direction to the downside. So if price goes back, which is rare in most cases, if price goes back, let me try to make it a bit cleaner. If for instance, price tends to do this, this, instead of the market reacting from this, maybe does something like this and goes all the way near this extreme swing point and sells. This extreme level, we call it bearish, different, bearish. I hope you guys are learning and you're getting it clear. I'm trying my level best to make it simple as I can. If I go to the chat and show you those kind of scenarios, I want feedback on the chat section. I want to know if you guys are learning and you're following. I want to know if these things are clear to you or you're getting confused. Before I go to the charts to give further explanations with illustrations. So I need to know if you guys are following. I need to know if you guys are following keenly, and yeah, I need more reactions. I can only see Victor. I want to see more reactions. All right, I want to see more reactions. I want to see more reactions. It's okay. No, Ahala, I'm going to do that in a few. I'm going to do that right now. I'm going to do that right now. Now, okay, somebody's saying I repeat. You can as well go back after this to watch the recording so that you learn, so that we try to maximize on time. So just a moment. Okay, I'll repeat for the purpose of everyone else to get this clear. So using this illustration here, oh goodness, there's an all right. So using this illustration, this extreme swing point, when price comes near maybe any area of liquidity that has not been consumed, this is what you call a bearish, different bearish. But if price comes and reacts on the flip levels, or rather where we have the break of structure, we call that pure bearish. And it's vice versa for a bullish market. So for example, if I was to label these things randomly or very fast, this one, it's a pure, maybe I can give it a short form of this is these are different bearish, different bearish. So this is a case scenario whereby we have sorry. So this is a level we call bearish, different bearish. And then where we have the break of structure, if price comes and reacts on this area, many people call this a breaker block. Here we call it pure bearish, right? So in this case, again, these are swing point that cause this low. So if price comes and reacts on this level, we call it pure bearish as well, right? This one, we also call it a pure bearish. And whatever I've shown you guys is a vice versa. So when it comes to a bullish scenario, it's a vice versa when it comes to a bullish scenario. So the same is just a vice versa. Let me show you. So when the market is on a bullish trend, so this becomes our bullish. Hold on. This becomes our bullish. Moment. This becomes our bullish difference. Bullish. My goodness, sorry. This becomes our bullish difference. Bullish. And then where we have the break of structure happening, that's the zone that we call pure bullish. So those are the pure bullish levels, like somewhere like here. Those are the pure bullish levels. Those are flip levels in short. And then on the extreme swing points of it, that's what we call the bullish difference, bullish. So I want to use the chart illustration to show you examples of that. And then I'll give also Sage a chance to share maybe from his end. All right. So now when you look at this chart, for instance, allow me to go to a lower time frame. So this is 4 hours. This is where we have break of structure. These are pullback, and these are continuation of the trend. So these are pullback, retracement, whichever are a counter trend, because the main trend here is bearish. And then to the downside, we have a continuation of the bearish trend, because the current market is giving us a scenario whereby we are having dominance over the bears, or rather the sellers. Now, whenever I identify a zone like this, let me show you. Whenever I identify a zone like this, we have a couple of touches. We have a couple of touches here. We have a couple of touches. Like for example, we have these ones and these ones. So if the market comes near this zone, there's a way I align this level and get my entry level at that particular zone. And of course, before the market impulsively sold, what was the last structure that was created? I have a structure here, which we call a type 5 area of liquidity. So when I'm doing my refinement, I'm going to consider this as my extreme zone. I expect price not to surpass this level because you already have a type of liquidity which is stronger and it's near the validation point. So these are an area. If this price was to come, for me, this will have been my best area to look for refinement of selling even further. Remember the market moves random and it's always right. So, and that's why this is a market of probability. You can have a working strategy, but the strategy will never be 100%. That's why every time when you're executing a trade, we must have a stop loss, right? Now, let me just get a different pair and illustrate something. Maybe I can use a pair like pound NSD, for instance. This is pound New Zealand dollar. This is 4 hours. This is an example of price doing an example whereby initially price was, I'm talking about the resistance that turns, support that turns to be resistance flip. So if you align all these, you get to realize that price was being supported here a couple of times. And then later on, the market came and broke to the downside. After price breaking this level, we saw the market coming back to retest near this key level. And we could see the market continuing to sell. So there's a way we do that. I might not be able to cover everything, guys. I'm really trying to just highlight on the most important things. So when you play price, you realize that the market came back near that zone, and then it sold massively around this level. It sold massively. Yeah, we're gonna talk about the advanced liquidation concepts probably on Thursday and Friday. So make sure you attend all the sessions. So we are currently developing the aspect of mapping or understanding the basic foundation, which is market structure. Because once you understand the basic foundation, which is market structure, when it comes to entries, it becomes easier for you. And as what Sage is saying, the way for us we see liquidity is kind of different from how a majority understands liquidity, right? Now, so let me try to just randomly pick the different zones to show you examples of resistance that has to be support. I'll show you scenarios of pure bullish, pure bearish, bullish, bearish difference. I'll talk about what else? Yeah, I think those are the most important things I'm going to talk about. Then I'll talk about the flip level. So let me just go back in time. That's 1 hour time frame, just to show you random zones. Because as a trader, you need to identify like what kind of a trader are you? Are you a swing trader? Are you a scalper? Are you a position? You can't be everything. You have to stick to what is aligning with your personality. Because there's somebody who wake up in the morning, analyze the charts, get a trade. Once they hit their target, they're done for the day. There are people who are very impatient, and there are people who are very patient. So all of us can never be the same. I think I have a couple of examples on pairs like USD. Just go back. For instance, now when you look at this scenario, in fact, I've gotten a good example. When you look at this scenario, at this level, when this market was showing us signs of buying, first of all, this was the last swing point that we had. Let me show you. We have this swing point. Hold on, so we have this swing point that caused this low. We also have this swing point that caused this low. Then you have this swing point that you expected it's gonna close below this level. But what happened? The market never closed below this level. And initially, we have this swing point that we expected to close because a break to the downside, but that never happened. So later on, we could see candlestick body closing above this. That was an indication that we're having signs of bullish moves. So when I look at this chart, before this market reacted with this candlestick that we're seeing here, we could see some sort of reactions. If you go to the lower time frame, like 1 hour, you're going to see what I'm talking about, the pure zones. So in this case, the lower section, which is all of these, I can even focus on this candlestick. I don't know if it's a doji or I don't know the name of that candlestick, but I know you guys know. So when I come to this extreme low, this probably could be my area of interest. And in terms of liquidity, based on how we trade for us, in terms of liquidity, let me use lines. Let me try to use lines. In terms of liquidity, I'm going to focus on, this. So that's where we have our reaction. So, hii level ya chini ndio tunaita bullish, difference bullish in this specific case. So when the market comes down, it's going to come to that and pushes up. So if I was the one trading at this level, once I identify this as my point of interest, for example, once I identify that as my point of interest, for instance, there are so many things that I can already see. So with that, I can go to H1. With that, I can go to H1. 1 hour time frame. That is the aspect of time frame alignment. Time frame alignment. So as far as I'm concerned, when I look at this level, you see this level, this Euro USD, when I look at this level, I'm already seeing a lot of stuffs. Number one, there's liquidity engineering here on 1 hour. And you know what gives you more refinement is the risk. If you see the risk is not making sense, you even go lower. So if I was to have my entry at that particular level, that is a stop loss of 30-something pips. Our strategy doesn't allow us to have such kind of what do we call it? Such kind of what do we call it? I mean those number of pips in terms of stop loss. It's so massive, but you need also to understand the aspect of liquidity consumption. So when I look at my structure within this zone, liquidation has happened here. So price bought, came back, consumed this structure, and then bought. So the last area of interest that has not been consumed, I'll probably say it's around this level. So I even don't need to use the lower section. So this is my area of interest where I need to focus on, because this one has been retested by these. So if I measure this pip range, it's kind of making sense. So that's around 26, but I still feel that is a lot based on our strategy. So if I want to see a lot of information, I'll go to 15 minutes so that I can see anything that is hidden in that zone. I'm showing you, I'm assuming if I was trading, if I'm the one who was trading that zone. So as I look at that, I'm actually able to see some sort of I am able to see a flip. If I go to the line graph, the things that I think Sage is going to talk about them, probably. I'll give him a chance. So I can see we have a flip level here. And we also have this type of liquidity we call type, it's more of like type 1. And we have this one. So this is my best zone to focus on. This is my best zone to focus on when it comes to selling. So if you play price, that's the zone that you realize the market came to. That's the zone that the market came to before it started buying. If you play price, that's the exact zone that price dropped all the way to before we could see. I know as we go on, we'll teach you about entries, how to refine your entries. See, price tapped exactly on that line. So when I draw these two lines, this is my entry, my stop losses. slightly. If you measure the pips, I was telling some people when I was in KVD and in Italy, they were wondering, sometimes you have a stop loss of like 5 pips, 10 pips, and they were like, how is that possible? But because of different brokers that you're using or different account types, you need to give room for the market to breathe. So if I was the one trading and I have that set up, my entry will be there. And then my first target. So I'm going to show you the aspect of how we get these crazy rewards. So my first target could have been there. So with that, I'm going to have a setup that looks like this. That is 9. So I can even make my stop loss to be 15 pips. So when you look at these, it's kind of weird, but that's how we do our things. We want to maximize on all the pips that are available on whatever you're trading. So if I had that, so that could have been my setup, then my entry there, then boom. So once my price hits there, and you see, the thing is, the intention is as we go on, we want to have, where we have our take profit is our entry for the next trade. Anyway, I was talking about an example of a bullish kind of difference. So this is a zone we call bullish, different, bullish, right? So as price keeps on pushing up, as price keeps on pushing up, you're gonna see different scenarios. So because Sage is here, I also want him to contribute by giving out scenarios and examples of pure bullish and all that. Sage, I don't know if you're in position to do that. Maybe give out examples from your end. Nimeongea mpaka mate imeisha kwa mdomo. Yeah, just show them examples of pure bullish, different and all that, the resistance, support, clip and all that.
Okay. From my side, I can't share my charts. I don't know what's up.
Oh, you're not on your laptop?
No. Like, there's no that option hapa chini where I can share my charts. I don't know.
Maybe
you stop sharing.
It's okay. Let me stop sharing my screen so that you can. Just a moment. I have to check on.
Allow me.
I've made you to be an host. Are you able to share the screen now?
Yeah. Share screen. Wait. More.
Meanwhile, guys, on the chat section, keep engaging, keep asking questions. I'll be reading that as Sage is sharing, all right?
I still can't share the screen. What is the issue? Reactions. Nope, I can't share the screen. Okay, let me answer your questions before. So in different bullish zone, we don't need to wait for confirmations, just define entry. Don't worry, Esther. There's a way that we are actually confirming. You can't really trade without your own personal confirmations. Can you tell us about price distribution, psychology levels, quarterlies? Okay, time cycles, quarterlies, risk management. Fair value. I think you came to the session thinking that we are trading ICT. We have a whole different system that technically it covers a good number of things, but it won't be covering what you have, the ideas you have in your head. Yeah, we'll be talking about risk management. Yes, we won't talk about time cycles because our system has a way that we check our charts and how we move from different time frame to time frame. Psychology levels, we will not talk about psychology levels because our system caters to such kinds of things, because we are not talking about things that, for lack of a better word, things that are not like something that you can't see. Yeah, we're not talking about when we're trading gold at the all-time high we expect to see a reversal at this point. No. We're talking about, can you see this on the chart? Yes, if you can see this on the chat, then it can be executed. I hope, fair value, I have answered your question. Probably leave, then join for the future to refresh again. Okay, but sasa health sijui ameenda wapi. If I leave, I don't know if I'll still be host. Just a moment. Let's see. No, if I can't leave at the moment because I'm currently the host. How am I going to do this? Na here's Amanda. Okay, let me use a whiteboard.
I've reclaimed the host. Are you still able to share the screen?
Okay, so easy. Let me leave, then come back, and you can add me as host. And come if I can share the screen. Yeah.
All right, let me do this. Okay, so this thing I think I'm
Because
supposed to be setting.
on my side, I don't think I can share my screen.
Okay, just a minute. Hold on. I need to set up something very quick. Guys, can you confirm? Said you can try to share your screen again. And
Okay, let me just rejoin.
okay.
Reload.
I had to mute everyone so that there are those people who don't listen, because if we allow everyone to unmute themselves, we'll have a lot of noise. Unless if you guys can be disciplined, I can do something so that Sage can just take over, because I want to be talking on the side as is the host, because if I go on doing settings, I might take a lot of time. Sage, are you able to share your screen? Let me see. Sage, are you able to share your screen? All right, it seems Sage is having an issue. I'll just go on. I'll just proceed. Because time is also running. I don't want us to be here past 9:30. Let me just go on. We were talking about, let me use the lower time frames okay, just use the lower time frame, for instance. I can go back and, okay, today is on, Tuesday. Okay, all right. So let me even use this current price action. So if you look at, for example, this is an example of what you call bearish difference bearish. This one here is an example of bearish difference bearish. Oh, sorry. Let me share my screen. That's why it's important you guys to be engaging. My screen is visible. Somebody to confirm. With our system, you can scalp, you can intraday, you can swing. Once you understand some things, you're good to go Mosotho. I think Mosotho, you're from Zambia, or I don't know, 226 or Uganda. 266 is which country? Is it Zambia? I'm not sure. But Morocco. Where are you from? Oh, Lesotho. Oh, that's okay. I'll talk to you later on. Yeah, we have some concept from that. Now, these, for instance, when you look at this level that I've just drawn, this daily time frame, in fact, we had these cells. I think the other week, but one. So let me show you something very quick fast. Time is really moving. Now, when you look at this level, for example, clearly, the trend is bearish. Even when you check from the upside, the trend is bearish. The trend is bearish, it's creating a series of that, and we are here now. So if you are, for example, checking the market at this level, we have some sort of like a break of structure, and then this becomes like an inside formation. Within this inside formation, or rather the inside structure, the internal structure of this particular price action, we're gonna have to consider a point of interest And our method guides us to use types of liquidity. So I can able to spot a type of liquidity here, which is, I believe, the type of liquidity that we can see at this level. It's a type 5, right? It's a type 5. So on this type 5 liquidity, now this level that we have here. So I will have probably said if we have validation, and then our invalidation point, we have validation, then our invalidation point is on the wick. The invalidation point is on the wick of this swing point. Right? We have validation and validation point. So when I am interested to sell other people, I want to accommodate everyone. This one, simple price action, we call it a bearish engulfing candlestick. Simple price action, we call this a bearish engulfing candlestick. The ICT people, they call it order block. For example, they call it an order block, right? But for me and our system, we call this a type 5 area of liquidity. So once I identify that zone or that area of liquidity, of course, this being our different bearish area, I'm going to focus on refining within this zone. So I'm going to mark that type, and then I can now go inside using the sequence of time frame alignment that I can narrow down to 1 hour. There's some premium things that I might not really give them publicly for free, but I'll try to give what works and what can help you. The things I won't really give them for free to everyone, because we don't really appreciate free things. So with this now, with this, I have a lot of information that I need to rely on. So if I go further, understanding the aspect of liquidation and all that, so we have this. This is 1 hour. And when I'm on 1 hour, I can even have my entry at this area. I can have my entry here because we already have liquidity engineering. But I need to refine further, because if you measure these pips, those are like 11 pips. Those are like 11 pips. You can have your entry there and target even 1 to 5 hour and all that. But as far as I'm concerned, yeah, that's why we have our liquidity engineering. And if you actually play the price, that's the zone that the market reacted. So I could even decide to have my entry there. Let me show you guys. We'll have my entry at this level and have a stop loss of even 20 pips, for instance. Or let's say a stop loss of 20 pips. And then maybe I can go with the aspect of 1 to something R. So let me go back to the daily time frame just to look at areas of the next areas of liquidity that make sense to me. So with that, I can have my target even on this key level. That's already an RR of 1 to 4. Although I need to define further. Just showing this just for the purpose of learning. So I've already identified my zone based on the aspect of bearish different, which is that area. And there we have a type of liquidity, which we call type 5. Right? Now, once I have that, just a moment. I feel like I need to refine. Even the stop loss of that is still making sense. Even the stop loss of that is still making sense, because when you look at what happened, price came tapped and sold. So hold on, I think there's something I missed. I want to do it better. 1 hour time frame. For us, we want to have 1 hour time frame. I'll go to 15 minutes. That's 1 hour, so I'll go to 15 minutes. I need to see anything that is very significant to get the best entry. Perfect. I even don't need that, so I'll use this. I'll use this. and this. I can have my stop loss here, but you need to give the market some room for breathing. So that's like 8 pips. So you can now give it and give an extra 5 pips from that level. You can give it an extra, yeah, somewhere there. If I go back to the daily time frame, I look at the higher time frame liquidity zones or other levels. That's my best take profit zone. So if you check on what actually happened, price went all the way, tapped on that level, and then from there, you could see the market selling even lower, you know. Just for the purpose of learning, as the market is selling, so those guys who normally see my entries and they wonder how this is how I do it, but there are things I'm not going to avail as I'm not going to share them for free because it won't be fair to some people. Anyway, so down here, when I was talking about the aspect of impure liquidity and talking about the aspect of resistance that turns to be a flip zone. So when you align these zones, later on the market came reacted on that zone and it's been buying. But I'm looking forward to see dollar to buy. Okay, so if you check out, I hope you guys can still see my screen. There are some things I will even say you'll agree with me. There are things you cannot teach for free, even if it's a master class, because we know. So whatever will give you, but other things. Okay, so the market came tapped on that impure liquidity and it went. I think last week there's a setup I also had just with our strategy. I'm going to show you that zone as well. I don't know why my machine is hanging. So if you are to hold up to this level, that's a clean 1 to 13R. In fact, stop loss is supposed to be here, 10 pips. But you have to give it room for breathing. That's why when you're choosing a broker to use on the account type, with our strategy, you need to be specific on the broker and the account type, because you cannot, for example, on HFM, you cannot use a premium account to trade this strategy. You'll be hitting a sell every now and then. The market goes to your direction because you might even have a higher stop loss. I know somebody, the meeting Jonah, when we started, when I was teaching him this strategy, he used to have very nice setups, but every time he complains that the trade is very correct, but is being taken out every now and then. He realized that he was using the wrong account type. So that's why every broker, when you're choosing a broker to use, you need to know your strategy. What are the things that are in your strategy, so that you know how to maneuver around. All right. I hope you guys are getting value. I hope you guys are getting. There are so many brokers. There are so many brokers that you can use. There are so many brokers that I can use. After the masterclass, I'll recommend 5 different brokers that you can use for that. So I want to get feedback from the chat section. Are you guys getting value? Are you learning something? Are you learning anything? Now, last week, I remember last week, I had this setup here. Let me show you. I'm doing this for the purpose of just to educate guys. What will I is mambo. Last week I had this setup, a sales setup. We were doing a live session, and our area of interest was this level, whereby we have a type. It's an area of interest. So we had this type of liquidity. That's type 1. Victor Quena, what's wrong with you? I can see you're drawing a lot of things on the screen. Stop that. All right, so we had that type of liquidity. Sorry, we had that area of interest. These are zones that cause the impulsive drop. And I want you guys to know that there's a high chance the market will be coming back to this level. And maybe even it did. Let me see. I'm not sure. Let me see. In fact, price came near that zone and went anyway. So, but I want to show you this zone. I want to show you this zone. So after marking this area of interest, this is my type 1 area of liquidity, and that is 4 hours. When I'm on 4 hours, I'll narrow down to a time frame like 30 minutes, time frame alignment, the liquidation cycles that we follow. So when I'm on 30 minutes, I'm able to spot these act as my whole zone of liquidity on the higher time frame. So when I go to 30 minutes, I need to look at the liquidations that is happening on the lower time frame. That's why those guys who have attended my sessions have always mentioned top-down analysis and down-top analysis. So with this, I'm already able to see a lot of things. We have this area of liquidity, and I'm able to see, I'll probably say this is more of like a type, it's more of like a type 3 because of that week to the upside. It's more of like a type 3. Sage, what type of the liquidity is that on the extreme end? You can type on the chat section. I don't know if Sage is here. The one that the one with the wick. And that is already a type of liquidity engineering we call reactive. That is a type 3, yeah. So that's a reactive liquidity engineering that we have right there. So I will decide to have my entry here for some slight sales when the market comes there. But what determines my refinement is the stop loss. That's already a stop loss of 7 pips. So if you focus with these strategies of ours and you are trading maybe prop funds, and you be disciplined, the problem is over trading that can affect you because you can get a lot of setups. So if you focus with this system and you can get like even 2-3 setups, you're done with phase 1 and phase 2. It just needs you to practice and be very disciplined because you need to know how to apply risk management and all that. So now, so we have that. That's already an SL of a stop loss of around 5 pips, right? But I can even go lower and do refinement. I want to see anything that is hidden with that zone. That's what I look for. In fact, I've even seen something that is very important. Perfect. So at the extreme end, what do I see? I'm able to see, I can use this. I'm able to see type what? That is a type 5. So this is where I will have had my entry. So if I was to sell, that's why I will have my entry. Now I've refined further so that my entry is on the best price and I can minimize my risk. So with that, we go back to 30 minutes and 4 hours. My bias was based from 4 hours. I came to 30 minutes. So unapata entry yangu itakuwa mahali kama hapa. So with that, I'll have something like this. Let me show you. I can have an entry here and target maybe a minimum RR of 1 to 5. That is 4 pips. Remember, this is Euro USD. Then maybe I can target, hold on. And target these rejections. Can target those rejections. Something like that. Or I can target that area of liquidity because that's a best zone for price to buy. So that we can give room for breathing. So I can extend this, maybe I can make it even to be 10 pips or even 7 pips. Let's say 10 pips. 10 pips, that's an RO. If I go to 10 pips, it's still a good RR, but according to our strategy, once you get an entry like this, that is a stop loss of around 3 pips. So you give it like 5 pips, 3 to 5. So 3, that will be like 8. That will be like 8. So I'll give it 8. 8 ticks. That is equivalent to 8. That's an RR of 1 to 5. So if you play price, if you try to play price, there's a setup that we had, I think, last week. I don't know if it was on Monday or Tuesday, I'm not sure. Yeah, when price went, the market went all the way, tapped our entry. Then from there, we could see price delivering to our target and then bought. I hope you guys are learning. Okay, I can go to Euro NSD. Let me get some reaction on the chat section as I wrap it up. It's already, I can extend to 9:30. Let me get feedback on the chat section if there's something that you're getting, guys. We are almost 50 people in this meeting. I can only see one person commenting. I don't know. Euro NSD, Euro, New Zealand dollar. There are some things that you might not grasp them today, and that's why I'm live on YouTube and I'm also streaming this. So you can go back later on at your free time, try to watch these things. If you're going to have a challenge, now you come to my WhatsApp. You can come to my WhatsApp, tell me you want to learn this strategy, I will charge you $1,000, you know. Hawa namna gani sage? Anyway, all right, so I can't teach you algorithm info. You have to pay $1,000. Anyway, we decided to do a free masterclass. So somebody is saying all the TPs are entries for another set. That's actually, I'll show you our Discord. You see the kind of setup that you normally have. So you're saying today we had a setup. I wasn't really active today on the chat. We had a setup on give me the time frame cycle. Just give me the time frame cycle and I'll check it out. Yes, whoever is texting me on WhatsApp, this class is recorded. It's being recorded on YouTube. Just after this, I'll share the link. If you go on YouTube, search Etribe concept, you're going to see the current live stream going on. Oh, it was 4 hours. All right. Let me just go there and find it out. 4 hours time frame. Robert is asking with your strategy, why is price coming back at entry after TP hit? The aspect of liquidation, but it's not all the targets comes back to entry. It's not all the what do you call it? It's not all the types. I mean, all the setups that comes back to entry. Not all the type that comes back to entry. So let me try to scrutinize English. Yeah. All right. So we have this key level, and then price at okay, hold on. Price traded above. These cost these. Okay, so I'll probably use this. You know, we are randomly giving things. There's a sequence of all the playbook of the strategy. So that's 4 hours. I go to 30. There's a setup I saw somebody took out. Here we have liquidity engineering. I can go lower. In fact, that is a stop loss that's making sense because this is already, if somebody, those people trade normally, if you measure the RR, but I'm going to refine a bit. That's 14. That's almost 1 to 3 R because 15 divided by 50, it's almost 1 to 3 R 45 because the stop loss here is like 15. The market has already done 50 something pips. That's an RR of 1 to, that's an RR of 1 to 3. But if I go to the higher time frame, which I'll do with you guys, so I can go to 5 minutes if I was to refine this specific entry. That area, we have reactive liquidity engineering, which is actually here. So that will have been the best entry. That will have been the best entry, and that's where price came tapped. So if I go to weekly time frame, daily, there is already these are key level. These are key level. I don't want to start going deeper, explaining things. So let's leave it at that point. So what you're going to say, our strategy is based on the concepts of liquidity, and there's a lot of information. Once you understand these things, I always tell every trader, first of all, understand the market structure. After understanding market structure, other things will follow. In fact, this trade is going to be a swing trade because there was breakout structure. This is a very powerful area. Let me see. Yeah, this in fact is an example of what I was talking about. This is an example of bullish difference, bullish plotted from weekly, weekly time frame. If I use the aspect of impure liquidity on the daily time frame, I'm combining the concepts of FTAs. I have impure liquidity here, and here we have, in fact, we have a key level around this zone. We have a key level around this zone. Anyways, I think up to that point, allow me to end it here so I can give you guys the next 10 minutes before we wrap it up. If somebody has a question, please feel free to drop them on the chat section. If somebody has a question, please feel free to drop them on the chat section. I can now allow Sage to answer those questions. I can see a question from Mosotho. Is asking, is 4 hours your common constant time frame? No. A constant time frame can be any time frame, depending on the case scenario. What are you looking at? Mostly, I use monthly, weekly, most of the time, monthly and weekly. But once you understand the liquidation convoy cycle, any time frame could be your constant, depending on that specific situation that you're in. You could be looking for an intraday, and 1 hour at that particular time could become your constant time frame to guide you in terms of direction as you narrow down to 15 minutes, 3 minutes, all the way to 1 minute. I don't trade like Stocker. My system is kind of, it has some similarity. That's not really important. The most important thing is you getting the concept and learning. Our strategy is a combination of a couple of things that have been refined. Anyways, it seems guys have no much questions. Somebody by Project Nestor, how is GBPUSD in terms of, you want a setup? You're not here to analyze. We are here to just educate guys. We are not here for analysis, but and just check on it. I'm looking forward to see price come to that level, and then I'll sell. But I'm currently looking to see price coming to this. I refine, buy. In fact, we talked about this yesterday in our morning session. So I'm looking forward to see price coming to this level. I buy, and then once it comes there, I'll sell, depending on some confirmation that I'll be looking at. That is it, if that's what you want. So I'm looking forward to see price come to this. I refine, buy, then sell. Yes, Elvis. Yes, it can be applied on gold, Bitcoin. Yes, we trade Bitcoin, we trade gold, silver, Nasdaq, and all that. It's okay, Elvis. Let me see where you are. You can raise up your hand on the chat section so that I can allow you to stop. Just raise up your hand on the Zoom. It can be applied to any tradable asset. That's from Esther. Esther, she's in the community. So it's Elvis. Okay. Yes, Elvis, you can go on.
Yes, hello.
Yes,
I hope mnanisikia.
I can hear you.
Yes, thank you sir. Nilikuwa nataka kuconfirm both for myself and for everybody else
Yes,
kwa the 4 terms that you've mentioned.
yes.
Mimi venye nimeelewa, so ningependa as I mention it kama iko sawa ama kuna venye mi sijashika 100% natumia Kiswahili juu nimezoea hivyo. So for pure bearish venye mi nimeandika nimeandika like an extreme lower low swing point that is validated or causes a break of structure. Hiyo ndio definition yangu ya pure bearish. And for pure bullish, extreme higher high swing point that is validated or causes a break of structure. And I hope niko sawa hadi hapo.
Yeah, just go on.
Oh yes, sikumalizia but hapo kwa sasa bullish different bullish venye niliona ulikuwa umeieka is when price is making lower lows then price fails to form a break of structure to the downside. Hiyo week fulani hiyo ndio tunai characterize as a bullish different bullish. Sasa sijui kama tuko sawa hadi hapo.
Let me show you. You see these
Okay,
things that are
let me
written
answer
here?
you on that. Yeah.
It's okay.
Yes.
Just go on, Sage.
So for the bullish different bullish, the difference between the pure different and the bullish different. For the pure bullish, assume you have a support level. When that support level is broken, like I'm talking about the normal support. There's a way in our community we actually put support levels. We don't just draw lines. We check on the candlesticks, then you see this is a support level. When that support level is broken, it becomes a flip level. Why? When price goes up, it will come back to down. It will come back to down that level, then it will push to the upside. Now, if price decides to go lower, deeper, like there's that support level. Let me use the annotator so that you guys can see. Now the price is bullish, right? It's going up, it's going up, it's going up. Okay. So this price level over here, we have this A level over here. So when price comes back to this A level, then pushes back up, this is a support. Okay. Now this support, when price breaks it, then comes back to this support, that is a pure bullish. When it respects the A level, price does not close below this A level. Sawa sawa. Now, when price is moving high highs, lower lows, high highs, lower lows, high highs. Okay, let me just draw it better. When price is moving from like this, let me do this. High, low, create that structure. Then it comes back inside because there was liquidities that were lying here. This is what we will call a different bullish, different bullish, simply because it came back inside here to consume liquidities. Sawa sawa. The major difference between this, the major difference between the bullish, pure bullish and the different bullish is just one thing. Over here, liquidities that are lying here have completely been consumed. Sawa sawa. Price was consuming that liquidity. So price sees no need to come back to fetch them liquidities that are lying here. But for this, when price is coming up like this, then there's liquidities that are lying inside. Price will come back to take that liquidity. Sawa sawa. It can come like that, then go. Because this one over here, liquidities were not consumed in this leg or this structure and this structure. So the difference between pure bullish and different bullish is one thing: liquidities. This support level did not become a flip level because price had to come back inside here to consume liquidity. After it consumed the liquidity, then the price pushed to the upside. So the major difference between the two is for this one, think of it like a pullback deep inside levels that had liquidity engineering, or the types of liquidity that we talk about. And the types that we talk about is not the one that you hear ICT talking about or SMC traders talking about. Our types of liquidities are different. We have from type 1 to around type 6 or type 5. They can go up to type 7, but you find that most of the time people don't really mention type 7 or talk about type 7, and majority of guys don't even know about it. So we don't usually go into that because it's not used, it's not common, not that it's not used. But for pure bullish, most of the time you find that there's liquidity engineering here that failed, and price comes and takes it. We'll talk about liquidity engineering. You've already been shown how liquidity engineering looks like. It's just that normal QM, but you can find QMs everywhere. But what you want, like in our system, that QM should be in lines with everything that we are talking about. It should be in lines with the market structure, it should be in lines with the time frame coordination. Everything has to align with each other. If they don't align with each other, then you are in trouble. Your stop loss will be hit. And price, if you're trading without a stop loss, you will be in danger because price will go through it like butter. Because if you check this one, like, don't remove the charts, just stay in. Yeah, we can talk about it over here. If you check well, there's this. Let me use the shape over here. You can see over here we have this. This is what we call liquidity engineering. We have it here, but it was not in line with. It was not in line with this liquidity engineering was not in line with the, what's this called, market structure. So if it was not in line with the structure, then that liquidity engineering is bound to fail. Because we wanted to sell from here, but price ran through it like nobody's business. But over here we had our flip level. It aligned with that. So these cells that came here, it came from our key levels that were lying here. And ideally, today in the morning, I was talking to one of our members. His name is Victor. He didn't take the cells from up there, but when you look at it closely, over here, we had liquidities lying here. So Victor got the cells from here. He didn't hold up until here. He didn't hold. I will tell you that for free. But he had that trade. Yeah, maybe he felt like he would overtrade, so he didn't hold. But he got the entries from there, and he sold. He got the entries from here. Let me line it well. There is that liquidity engineering. So this over here, you were expecting price to come here, tap here, then buy, right? But price failed. It went to the downside. So Vic got these entries from here, then it sold. Or was it from here? Then he sold. Either way, we can be getting all those trades that I have just showed you guys, and it's quite some good pips. Yeah, and the risk is something that if you lose, you're okay. If you lose like 15, 20, 30 pips on gold, you're okay, you're still okay. Yeah, but when we talk about liquidation or liquidity, we are not talking about double tops, double bottoms, whatever ICT told you. We are not talking about that. We talk about it in a very different aspect of it. Yeah, because even these buys, we could have gotten those buys. Yeah, our system helps you. You can swing trade, you can day trade, you can it has so much that you even get to wonder, what have I been doing, or what charts have I been seeing? Yeah? So Hez has got you laid out Liquidity engineering. Roba, you're asking what's liquidity engineering? This, when price comes, that then creates this level. This is a QM. So there's different ways for outlining the QM. Sometimes you can have there's a week here. Sometimes this can be this the week. We have different ways. So when we talk about all this, we're talking about advanced liquidity engineering, but the normal liquidity engineering is just that QM, yeah, where you get that when price comes inside, you take your sell from there, then price moves to the downside, yeah. Like here, can you see this? There's that, and there's that. Yeah. This is liquidity engineering, but it failed. Where did it go up there? It went because we have levels over here. Yeah. Anyways, when we talk about liquidity, we are not talking about what ICT teaches guys out there. That's one thing that I'd like to clarify. And what we talk about, it's something very simple. It's not something that you require to complicate so that you get to understand it. That's one thing that I'd like to clarify. How can you see that candlestick is going for uptrend? That's in line with the time frame coordination, yeah. How do we join proper masterclass? Okay, you can Mosoto, you can talk to Batswezi. I think he will reach out to you so that you guys can get to know how this and everything will work for you, yeah. Do we have any other questions that guys feel that needs to be clarified or answered before we end the session?
I think up to that point, Sage, time has really gone. We want to be doing this session up to around 9:30. So tomorrow, we're going to now get into some bit of liquidity. Tomorrow is on a Wednesday. We'll now do a little bit of introduction to liquidity. And maybe Sage, I'll really need your help with this. Then on Thursday, we're going to talk about something else. And then on Friday, we're going to do a summary of everything. Then I'll drop some free materials that you guys can have access to in the group, especially if you're in the masterclass group. So make sure if you're not in that group, you're there. So guys, all these sessions that you've had, you can go to YouTube, and I believe you guys can see my screen. You can go to YouTube and subscribe to the channel for notifications as well. I don't really upload fancy things, but I upload content that can help you learn trading. So go there. In fact, if you're in this session, the 40 of us, if you can go and comment on this session, what you've learned from the masterclass, and even ask questions, we'll use it as a reference whereby we'll be answering questions from the YouTube live. So just go to the chat section rather than the comment section of YouTube. Learn from it, ask questions, and then we're going to respond to with more explanations as we go on. So up to that, thank you so much, guys, for being here. I believe you guys are getting value, and I know by the end of this short masterclass, you guys gonna have a chance to learn and even elevate from whatever you already have. If you are a total beginner, you're going to have value. If you're already a trader who is an intermediate, you'll also refine your approach and even become better. I believe at the end of the week, I'll give out an offer on how you can also join our Discord server. We don't allow everyone on our Discord server, but I'm going to give out an offer for that. Thank you so much. We've come to the end of our session tonight. Tomorrow, same time, same link at 8 p.m. Be there on time. Let's continue learning. And I believe at the end of the day, we're going to elevate together as a community. You keep on giving feedback. Maybe also towards the end of the week, I'll open the group so that I can allow everyone else to talk in the group and maybe engage and all that. So I'll give a disclaimer. In the group that you have joined, you're going to get people DMing you with the different intentions because people from random places have joined the group for the masterclass. You get people promoting to you scamish businesses or selling funny things. Don't be a victim. Don't be scammed within our group and then you claim to. So if somebody DMs you with unnecessary kind of scamish businesses, please avoid that. If there's anything to do with the specific agenda, which is the masterclass, my number is right there. Please come back to me, ask questions, and I'm going to help you out. So I believe on the same screen, I've shared my number. So if you don't have my number, you might be in this session, and maybe you don't have my number. So ndio hiyo hapo. So you can have it. You can have it. That's my number. You can have it there. You can take a screenshot and talk to me whenever you need help. Thank you so much. See you in the next session tomorrow.